founder say I'm building is pretty important. There's a problem which exists. That's why I'm doing the right thing. But that is not end of the story, right? I mean, there would be a lot of solutions for which there would be need, but you should also see if they have a like paying potential around it or not. Because end of the day, you are building a business. Right? It's not a charity. So if there is no paying potential around that solution, then you won't be able to make it a business. Even today, a lot of startups do that, right? I'm sure if you give me a cab like within 5 seconds, I'll use that. But how much money can I pay for that is the next question you should ask.
Hello and welcome to the Startup Operator podcast. I'm Roshan Cariappa. We've spoken about India's payments space and how that could be a key growth lever for the Indian economy. And in this podcast, I tried to understand a little more about it, what it takes to operate in that space with Akash Sinha, who is the co-founder and CEO of Cashfree. Cashfree started in 2012, and Akash is a very sound, mature entrepreneur. We spoke about partnering with banks and working with regulators, balancing growth and profitability. Incidentally, Cashfree is a profitable business as well, being developer friendly or not, and Akash's advice for how to manage a downturn, how he sees the next 18 months or so. This was an insightful conversation, a lot of learnings for me. I hope you like it. So let's get started with this episode of the Startup Operator podcast with Akash Sinha. Hey Akash, welcome to the Startup Operator podcast. Thank you so much for making the time.
Hey Roshan, thank you for inviting on the show.
Yeah, very glad that you could make time for this. I think cash free is super interesting in many different ways, and we'll talk about all of those different ways. But before that, I would like to get your thoughts on the space in which you operate, right? Fintech and payments, more specifically. How do you see the landscape evolving? Because I think simply enabling payments seems to be a thing of the past. I mean, today, payment companies are layering a bunch of things, right? Whether it's software, banking services, even financing, and things like that. So, yeah, I would love to get a lay of the land from you.
See, fintech, as you say, right? Fintech is a pretty large segment in India, and it has few subparts. Payment technology is one of the subpart of fintech. Then you have lending, you have wealth, you have investments, right? So, and you have new kind of things like reg tech, lending tech, right? So, fintech is a pretty like umbrella term that we use. And payment is one of the I think important pillars. If you look like Indian economy, right, we have more than 2,000 companies in fintech space today, and more than around 20% of them are in payments, right? So, payment is a pretty crucial. Payment is like a like economy enabler, and it's not like it's a solved problem yet. So when we started this company 7 years back, right, I mean, core payments had issues. I think a lot of payment flows were not done in a very smooth way, right? People had to spend a lot of time in just get the basic things done right. I think it was big challenge, and now a lot of things look simpler, and that's where we get this kind of feeling a payment company should do more. But when we started, we had challenge on payment conversion, we had challenge on paying out to people, and the kind of technology that we built enable a lot of new business to innovate on top of that, right? Because payments is at the heart of any kind of online economic activity, right? Without payments you cannot sell or do business online, right? So we'll continue to do a lot of great things payments, right? As a company, we have evolved a lot. We started a bunch of payments technology. Now we're getting into banking as a service. We're also getting into risk and fraud kind of suite. Cross border is still unsolved problem, right? Cross border money movement is a pretty large opportunity for anyone who wants to export their goods and services from India. And those are the like still problems we are excited about, and we believe to give a very standard solution on them very soon.
Yeah, payments is kind of the tip of the spear, right? And it's also something that makes the Indian economy so much more viable as well, because we don't just have internet penetration, we also have payment penetration, right? I mean, whether through UPI and all of those other innovations. It's also one of those things that we take for granted. I am one of those who has used online payments back in 2008 as a merchant, and it was a hellish nightmare. Payments, people would just click on the refresh page and money would get debited, and then you would have that whole saga of trying to explain to them ki, I have not stolen your money. I mean, your money will get back to you in 3 to 4 days and so on, right? But compare that to now, and it's like super seamless, right? I mean, it seems magical almost for lay people who are kind of listening to this, right? Can you give us the some of the technical challenges of building that payment infrastructure?
Sure. If I have to speak about this payment gateway as a product, right? I mean, the example that you took, payment gateway has been around for more than 15, 17 years in this country, right? And it has improved a lot. I mean, definitely in the last few years, right? The challenge with payment gateway or a payment flow is, right, there are a lot of parties involved. The first is the bank who is issuing the card or VPA to you. Then there's a bank who is acquiring transaction on behalf of the payment gateway. And then there is schemes in between like Visa, Mastercard, Rupee, and then there are software vendors, that we call payment switches. When this entire journey started, right, a lot of these players were also new to India. They did not know how to handle scale, and things were still improving back in 2008, 10, right? That's why you see a lot of failures that time. But over the time, all these parties have learned what is the best way to operate payments. They've improved a lot in terms of technology. They have moved to cloud. right? They have the right intelligence system in place that will help them make decision faster. They've also improved on in terms of API webhook, right? Something that you can communicate automatically, right? I mean, back in those days, you have to send an email to the bank saying what happened to this thing. Now you can simply make an API call and get the information back. So these are the improvements which happened in the ecosystem, and that is made a lot of improvement. Even today, I think there are few minor hiccups. It's not like it's just very perfect, right? I mean, at times payment do get stuck, right? You have to reconcile it. You have to match, which payment gets stuck. What was the reason for it? And that's where we are trying to move the needle one at a time. Right? We are using like machine learning, some kind of AI to identify why the payment failed and what we can do, like to make this payment go through. Right. So payment info is not pretty simple in the back, right? It's pretty complex system that, and the kind of scale people handle is pretty humongous, right? I mean, we as a company do more than what 10 million payments in a day, right? I mean, that is pretty high scale that we manage. And out of that, even from probabilistic perspective, right? 10 or 20 payments can go wrong. So we're still working on that, and those are the things which make noise. I think the issues are less, but still we have to make it zero so that anyone and everyone will start feeling comfort once they come on the online payments. And to add to your term, right? And since you mentioned about online payments growth, India is pretty ahead. I just like to mention it in terms of instant payment volume, right? India is by far the largest in the world, right? We process more than 480, not 480, more than like I think 48 billion transactions in a year, which is like three times bigger than the second country in this hierarchy. And also the best part is this entire instant payment thing has saved more than 12 to 13 million dollars for the economy, right? In last calendar year, so India saved almost 12 to 13 billion dollars just by having this much of scale in instant payment volume. Payment is a growth enabler. It is a contributor to the GDP. In next few years, I think instant payment itself can contribute more than 1.5% to the GDP of the country. Right? So the impact is pretty significant and pretty big.
Right. All right. With that out of the way, could you describe the circumstances leading to the founding of Cashfree and how the business has evolved over the last 8, 10 years?
Sure, I think we have spoken in multiple times. Before starting this as a payment business, we are trying to solve the cash on delivery issue, right? And then back in 2014-15, the e-commerce was at boom. Every company was offering COD because that was one way to entice new customers, right? Trust was still low. People were opting COD normally. But COD payment was very cumbersome. When the delivery boy shows up, you have to come back with exact change or cash. Even the person who's delivering, they have to have the exact change. First solution was how do we digitize this? How do we make it more, like how do we make it supported a wallet card? And can we use the digital payment mode that people use while pre-paying for the order, right? So that was the concept. We started working on this problem. We signed up a lot of businesses in Bangalore, right? Be it your grocery store, be it your restaurants, like the like obvious ones who do home deliveries. And while doing this, while talking to so many businesses, we came to understand even the online payments has a lot of loopholes, right? The bar in the industry was not going high fast enough, right? We have looked at the global payment landscape and felt they were much more innovative, much more advanced. In India, we are still lagging behind because people are not really pushing more, right? I mean, they are happy with one of the use cases, but there are more use cases on the market which were being created because of this entire digital transformation, right? So if you look at the period 2013, 14, 15, your mobile revolution went up. A lot of traditional businesses which are on brick and mortar, they're also coming to the internet. And once they came on the internet, their money movement problems were not having the right solution in the market, right? And people were struggling to get solved. I can take one example, right? Back in 2014, 15, we came across a lot of gig economy companies and who were facing hard time paying money back to their vendors, right? Suppose I have 1 lakh vendors on my platform, right? How do I pay their wages in on time? Like if I have to make payment to them every third day, right? How do I make it on time and give them their earnings on a timely basis? Second, if I'm running a marketplace, if I have say 1 lakh restaurants, I have to accept money from the customer and I have to keep 20% commission with me and pay 80% back to the restaurant. So how do I do this kind of money processing and make it very seamless? So these kind of problems were not existent. So when payment gateway as an industry started back in 2010, these problems were not present, and that's where we saw the existing incumbents were not were working toward this kind of solution. So our entry was at a very perfect time. India was going through the transition period, and that gave us access to a lot of new opportunities, new problems to work on, and that's how we built a company around the entire payment platform as a concept. We were aware that in future there will be a lot of similar payment problems will keep on coming in the market, and we as a company should build a scalable blueprint so that we can keep on launching new payment solutions so that we will be ready for any kind of payment problem which come in the industry, right? So today Cashfree is like your single stop payment platform, right? You just sign up on Cashfree and you can get solution for all kinds of payment problems, and that's why we see a lot of value we are able to provide to this market.
Right. And part of your journey has also been the Y Combinator experience, right? So any pearls of wisdom from, Paul Graham or Michael Siebel that particularly influenced you guys? And also, what was it like, being a part of that cohort? What did you learn through osmosis?
It's been almost 5 years, right? We were there in the first week of June. I still remember that day. So YC was a good experience. It's a very good experience for any early stage startup. You see world very differently from, and these guys have a lot of wisdom, right? Guys like Paul, Michael that you mentioned, right? They have built large company. They've seen a lot of companies. They've seen how companies have evolved and grown, right? And they were able to share the wisdom. And the best outcome for us after YC was we were able to see world in a very different way, in a much simpler way, and also get a good sense of the business. In simpler terms, right? They're very focused on build something which people have demand, right? And that is something you can assess very fast. If your sales numbers are not going up, your revenue is not going up, it means you're not doing everything right. YZ was very important to kill those illusion which a lot of time founders have, right? I mean, a lot of founders believe if I keep on pushing this, at some date will give us a result, right? But that's not the right thing. You should able to measure momentum on a periodic basis. And if momentum is not coming, then you should be able to pivot faster, right? So YC gave that clarity, right? So that you don't stay in a status quo and keep innovating, keep working on. And if something is not working, better to shut it down and start again, right? So that you don't waste crucial years of your life.
Right. How do you structure your teams at Cashfree? Because when I look at the products that you have, I mean, you have multiple products, multiple services, different types of merchants that you're serving, and so on, right? So I mean, it could be like 20 different product managers running into each other, right? I mean, if you don't structure and align all of these teams, and there's this chance that you might miss the bigger picture as well, right? So how does all of this come together on the product side?
Correct. See, as a company, we have few teams which are horizontal, right? Something like customer success who works all the product, operations, all the product. But when it comes to the group of builders, right, where we have pod structure. For every product, we have group of product managers, we have set of engineers whose job is to make this product successful. So that's how we structure internally. It's not like every PM works on all the product. We have PMs associated with specific product, right? Some product need more number of product managers because they might be interested, and that's how they are able to create a roadmap. They do their own market research, they go and talk to the customer, and they see the entire market from the lens of that product, right? How do I put this product in these kind of use cases? That's how they come up with new ideas, discover new ideas, and also improve the product by taking feedback from the customers who are using that product. So things are pretty structured. I mean, that's how we are able to innovate on the existing product. At the same time, we also have a sort of new initiative team whose job is to keep on looking for new problems for the businesses, right? Come back with the ideas, build it, make it successful, and after that we do mainstreaming of those products, right? So that way we keep on innovating new product. So every year we have been able to launch 3 or 4 new innovative products for the market, and that is the I think way to do it. So this has been working for us. I'm sure other organizations have their own methods for doing it, but this method has been working good for us so far.
Yeah. So your payment infrastructure is pretty comprehensive, right? I mean, you let merchants collect payments in a wide variety of ways. I was just wondering, how does your customer acquisition work? What is some of the channels that are working for you, and what is a trigger for someone to evaluate and pick, cash free over some of the other options that are available in the market?
See, most of the incoming signups that we get on the website is through word of mouth marketing. Payment business also has some sort of network effect at some point, right? So our priority is to win certain segments, right? So that's why you prioritize e-commerce in a big way, travel in a big way, services in a big way. Right? We also have good presence in segments like gaming. So we have four larger channels, right? One is inbound signups. So people come to a website, create an account, and they can start using Cashfree. Next is the outbound signup, right? Where we identify a list of potential customer, we reach out to them, we understand their problem around payments, right? And then we go and pitch solutions that we have. And the best part for us is we have a lot of fundamental building blocks of payment, right? So it's pretty easy for us to solve any kind of payment problem compared to other competition in the market. If you look at just payment collection suite, I mean, we can help our merchants collect payment in 6 different ways, right? We have payment gateway, we have auto collect that helps you collect by NEFT, RTGS, right? Then you have payment link, you have UPI link, right? Then you have soft POS that can help any offline merchant collect payment. We have recurring payments. So it's not like we just go and offer one product to every customer that we talk to. Plus, we have a lot of suit on the payout side, right? So if you have complicated payment flow, what our account managers do, they'll take up these 4 or 5 fundamental building blocks. Basically, they'll take 4 or 5 products, stitch them in, and give a solution to the merchant so that their life becomes easier if they use everything together.
Right. And the other facet of the business is because you operate in fintech, you have to partner with banks and financial institutions. And for people who may not have that experience, what is it like? What are some nuances of partnering with these folks? I'm sure that things have, come a long way since 2012, 2013 when you guys started out. But what are some basic do's and don'ts?
See, I mean, in this world, in today's market, a lot of banks are excited to partner with a fintech. Banks also want to be part of a journey, and at the end of the day, the proposition has to be win-win for both the parties. Right. So end of the day, banks in India still control supply of financial product in a lot of cases. So you just need access to the right partner. You have to pitch your idea in the right way, and tell them how they are going to make money out of it, or how they are going to benefit out of it, right? So it has to make business sense eventually, right? I think if bank is able to make more money, or if they're able to get more deposit, then they'd be happy to partner with you, right? Second, at times banks also want to work with teams of founders who are more matured, right? Someone who is serious about this, right? Someone is not just casually trying few ideas. So that is the impression you have to give when you talk to them, and then only you can start with the partnership. Obviously, once you become a bigger company, life becomes much more easier because you have a track record to prove, right? So banks will start trusting more, because right, we have to see the banks also have this bandwidth crunch, right? I mean, things are to be done by talking to people, and they cannot talk to 100 startups in a month, right? That's not possible for them. So they also like prioritize their time, right? They also want to work with companies who are more promising, right? Who can give them result fast. And that is the reason you have so many banks, right? If one bank is choked out, you go to the next bank, right? So you have a lot of banks who are willing to partner with fintechs, right? So that as a company, you should always try multiple banks, see which is working well for you, and stick with them if you are having good success.
Right. And the other stakeholder, important stakeholder, I should say, is the policymakers and the regulators, right? We touched upon it very briefly. India's fintech regulation has been miles ahead of anywhere else in the world. UPI, India Stack, all of those things. The other facet of the policymaking slash regulatory environment is that they've been extremely proactive to startups, right? I mean, we have a sandbox environment for a variety of new things and so on. So how does it feel like to work with, this stakeholder, the whole policymaker and the regulator as such?
See, fastest way for any fintech to grow is by abiding the regulation which is already there, right? When you're a small company, it's not easy for you to go and talk to a regulator and say, I want this change, that change, right? I mean, that's not easy thing to do, right? So if you're starting company in fintech, right, you should read the regulation and try to build a product which is abiding by it. That way, you can reach at a certain stage, right? Then you can start getting participate in these kind of sandboxes, right? Because even to participate in sandbox, you need some experience on fintech and whatever area you are working in. So sandboxes are there. Obviously, RBI comes with these ideas. They want to also see how ideas are being executed, and once they see everything is correct, right? Once the entire money flow is secure, right? It is abiding with the larger goal of the RBI. Then they can come back and mainstream those kind of things. So we have been luckily part of one of the sandbox recently. I think the LRS on sandbox that we did few months back, and that helps us move money in a cross border for any kind of capital transactions. So those opportunities will keep on coming, but at the same time, I mean, the regulatory layout itself is pretty broad, right? There are enough things you can do without going to talk to a regulator or the policymaker, right? So that comes pretty late, in your journey. If you want to start in fintech, just read the regulations, and you can definitely find a lot of solutions that you can build right away.
Right. Yet another very key stakeholder in the wide list of stakeholders that you have is the developer, right? Because oftentimes, I mean, developers could be the one actually like, interfacing with your actually implementing the your solution and services. And it's become a very developer friendly market, right? In some sense. So what are you doing to evangelize your solution with these folks? What do they care about and how are you positioning yourselves for them specifically?
See, I'm going to say something which is very realistic. See, a lot of developers in India globally are lazy. I've seen a lot of companies coming back and creating APIs for everything which is possible, right? I mean, I have 10 APIs. If you want this, integrate 10 APIs. But that's not easy, right? I mean, you cannot integrate 10 APIs, test them, and keep on upgrading them. So to keep the developer ecosystem excited and engaged, right, you have to make the life simpler. You go and tell them you just do these 5 steps and your job is done, right? And you don't have to test it again. If something has to test it, it is automated. So a lot of times when you access API of any company, right, there's an error, right? So these companies will send an email to your support staff, then they will check the logs and come back, right? As a company, we go and put the logs on the merchant dashboard itself, right? If there is any error in API, you go and see the log for yourself, and then you can modify it. So this way, developers don't have to talk to anyone to complete the integration faster, right? So these are the steps we have taken. We understand. I mean, no one likes to spend a lot of time in these integration. Second, everyone wants assurity, right? If I've integrated something, it should work all the time, the way it is supposed to. So we have built a lot of internal sandbox program, sandbox module, right? So you can test everything a lot. You can simulate most of the stuff, right? So that you don't have to wait for a production rollout to start testing them. So these are pretty important to give comfort to the developer out there, right? And also having a pretty clear communication, right? I mean, handling all the edge cases in the documentation is pretty important, right? So that they don't get surprised. And the thing in fintech is if you don't handle any edge case, right, you might end up losing money or make some grave mistake. So building API of fintech is much different from building API, say for e-commerce website or say for a travel website, right, where you're just relaying the information, right? But in fintech, you're actually touching the real money as in the form of data. It's a responsible job. I mean, that's how we see it, and we make sure we handle all the edge cases, and we also educate developer in terms of these are the steps you should do. And at times we also keep a blocker, right? If we see a developer is not doing these 3 steps, then we'll not activate the account, so that they are forced to be disciplined at time and not act casual. Because what you've seen, a lot of these companies may not have developers who are pretty aware about it, right? So we have to keep this this kind of artificial checks, so that they're forced to implement say certain kind of encryption, right? So that the data cannot be tampered with.
Right. Yeah, you can't leave it to the vagaries of individuals, right? You have to standardize it and have checks and balances, especially because the stakes are high. Yeah.
We come across these cases of payment companies getting hacked, right? Or someone is hacking any merchant and access their payment account through a spurious way, right? To make sure these things don't happen, right? You have to enforce a lot of things so that the other company is pushed to do that before they go live, right? You cannot make it too friendly. That is my point, right? If you make it too friendly, then there could be incidences which no one would like.
Right. Something unique about Cashfree is that you guys are growing probably 100% year on year, and also you are profitable, right? How do you decide to focus on profits at this stage of the journey? Because it seems like not a conventional choice, almost counterintuitive if you compare to a lot of the others in the fintech ecosystem. So, how do you balance growth and profitability?
See, one of the things that we keep in mind is how do we stay differentiated, right? And for that you have to have this problem solving attitude. It's the simple, right? It's the world of demand and supply. If you're building something that world is looking for it, then they're willing to pay for it. So once people start getting options of the same quality, right, then you start seeing the like pricing pressure, and then you just start discounting just to stay in the game, which a lot of companies in this market do, right? So there are two ways. One is you start solving for the problem for which solutions don't exist, right? Second is if you're building solution of something already there, your solution has to be 5x 7x better. It cannot be at the same quality. So and these two things are pretty hard to do, right? I mean, and then luckily we have been able to figure this out very early in our journey, and that's how we try to ahead of the market, right? Even today this year the things we are working on, we know it will be popular after 2 to 3 years, but by that time our solution will be pretty matured, right, well tested, and that way we can have a pretty big chunk of the market when that becomes big, right? So this thing we have replicated with few of the products, right? We did with payouts, connected banking, and we are the market leader in those space, right? We own 60% of the market. Our quality of service is pretty high. It's a premium quality, and there we are able to charge the customers in a good way, right? Because the value derivation is also pretty high, right? So it makes sense for all the parties. So for a startup, the secret to be differentiated, you should be able to give value which others are not, and then you can have some kind of pricing coming your way.
Right. As simple as what YC says, right? Make something people want.
See, this is also come across. A lot of founders say, "I'm what I'm building is pretty important. There's a problem which exists. That's why I'm doing the right thing." But that is not end of the story, right? I mean, there would be a lot of solutions for which there would be need, but you should also see if they have a like paying potential around it or not. Because end of the day, you are building a business. Right? It's not a charity,
That's
right?
important.
So if there
Yeah.
is no paying potential around that solution, then you won't be able to make it a business. Even today, a lot of startups do that, right? I'm sure if you give me a cab like within 5 seconds, I'll use that. But how much money can I pay for that is the next question you should ask.
Right. So, what do you have coming up in the next 18 months or so? And also, we've seen what's happened in the markets and so on, right? I mean, there's a downturn. I mean, there's people are fearing for the worst and so on. You guys have been around for 8-10 years right now. What has been your experience of managing similar corrections, ups and downs, and so on? So, as a founder, how do you keep your head steady and like focus on the business and tune out the noise and continue to do all of the good stuff without getting distracted? Just a few thoughts on all of these.
See, I mean, we are in the seventh year of a journey, right? And we have seen this downturn earlier, 2 or 3 years back. See, the right way to do is we as a company have been trying to, do a sustainable business all the time, right? We try to be a lean team so that we can control our costs better, and that also forces us to be disciplined and be inventive. The second thing is more about looking at the business fundamentals all the time. We don't do a lot of unnecessary discounting. We don't sell something as a below the cost price of what we have to do. And these two things force us to be differentiated in the market, which I just mentioned a few moments back. And thirdly is more about keeping an eye on the value, right? Suppose we are spending time on something, it has to give you output at some point. If you're working on a project for 3 months 4 months, right, at some point this has to start making money for you. If that is not happening, then there is no point for you to like keep investing time just for the sake of some vanity metrics or sake of some kind of PR activity that you can do around it, right? So these are the, see, in simple terms, we are very business minded people. We know if you are going to invest $1 on anything, then we should get $1.5 out of it at some point of time, and that is going to keep the entire flywheel alive as long as we can do the right job. So even this year we are pretty focused. I think we have a lot of interesting things in the roadmap, and for that we see good potential in the market, and that's why we are like pretty narrow minded about those things. And second thing is keep your spend in check, and by keeping spend in check, it means like keep your hiring in check. I've come across series A companies who have 100 engineers with them, right? You don't need 100 engineers if you're a series A company. That itself is a death wish, and that's important, right? If you're a small company, you should keep everyone occupied, right? And they should have a right gratification, and try to lean. I mean, unless there is a like different need for that. I think a lot of startups, a lot of companies do bad when they let their cost go out of control, right? So everyone I see have a good business, but only downside is they have a lot of cost, and that's why they burn fast. And a lot of their costs may not be giving them value, right? Suppose I have 10 teams. Only the work of two teams are helping me generate revenue. Rest eight teams are not generating revenue. Then I shouldn't need those eight teams in the first place. I mean, it's not like I cannot invest 2 years or 3 years money on them and then I'll wait for the result, right? That's too far in the future. So all the investments have to be time defined. If I'm investing in this thing, within 6 months, I should start seeing money. And that's how you'd be able to make good decision in your journey.
Before you leave, don't forget to like this episode and rate and review us on your favorite podcast platforms. It helps more people discover our content. We produce a couple of episodes every week and a startup operator roundup on the weekends. Again, all valuable content. Please share these with your fellow startup operators. Follow us on social media and subscribe to our WhatsApp newsletter so you can get all of this content delivered straight to your inbox. I'll see you again on another episode.